So in today's video, we're going to be discussing this trend line right here. Now, this is one for the bulls. It is a long shot, but it is something that is possible.
What do you think the chances are?
Well, that's really hard to say.
Hit me with it. Just give it to me straight. Least you can do is level with me.
Not good.
You mean not good like 1 out of 100?
I'd say more like 1 out of a million.
So you're telling me there's a chance? Yeah!
Okay, guys, so we're going to be discussing this trend line right here, and some of its nuances, I guess, is a good word to kind of explain what is going on here. Now, this chart is Bitcoin paired up with the US dollar. We're on the 1-week Bitstamp data, and this is basically a trend line that you can draw on your chart from the 24th of June 2019. You can see that it got tested on the 21st of June 2021, another test on the 19th of June 2021, and then an additional test right up here on the 24th of January 2022. Subsequently, we lost this trend line as a form of support on the 2nd of May 2022. Right now, you can see that yesterday we actually pushed up to this trend line, and it is acting as a bit of resistance. This was, of course, on the 8th of January 2024. Now, the thing with this trend line that we need to understand, and it's one of those that is going to split opinions. Like I said, this is a trend line that's been drawn between these areas. This is categorical fact, but it's also a fact that this chart, that as I have drawn it here, is not drawn on a logarithmic scale. And this is, again, personal preference to a degree, whether you use the log scale or not. However, for cryptocurrency, it is usually preferred to draw your charts using logarithmic scale simply because of the volatility. As you can see here, because this is not drawn on a logarithmic scale, you have your 2017 high down over here, and you have your 2021 highs over here, and you have your bear market low in 2022 over here. Right, this chart looks quite messy just by looking at it, and it's very extreme in the way that it moves. It's not incorrect by any stretch of the imaginations, but of course it is something that we need to consider, that if we draw, of course, on a non-logarithmic scale, then all of our analysis must be aligned to that. And likewise, if we draw all our charts on logarithmic scale, as I personally do, then we obviously have to draw all of our analysis based on logarithmic. All the tools that you use, including the Fibonacci retracement tool, has to be in a logarithmic setting. Okay, you cannot use a non-logarithmic fib chart on a logarithmic chart. It just wouldn't work. And so this particular trend line not being drawn on a logarithmic chart got me thinking, what would it be like if we were to actually draw it on a logarithmic chart, right? You'd think that actually surely it would be the same, but it is not. Let's go ahead and bring up our logarithmic scale. As you can kind of see, things straight away have been calculated out and are vastly different. Let's go ahead and take a look. So for example, we can see the 2017 high now is actually reasonably high on the price chart, and we can see how we only really went down a little bit lower than that 2017 high here, unlike on the non-logarithmic scale. Now, as we had our trend line drawn previously, we were connecting the high point over here. Okay, this is the July 2019, and we drew this across these lows that we had over in June 2021, right? 21st of June, and we have another test over here, 24th of January, and then we obviously lost that on the 2nd of May, right? But you can see that drawing this trend line on a logarithmic scale shows us a very different output. We are no way near touching that trend line from our current price action. This means that essentially from a logarithmic scale, this is absolutely nothing to worry about, or might even lead the bulls into thinking that we have a fantastic run even further before we have rejection. Also possible, right? And like I said, this video is a video for the bulls because this trend line here as drawn would be very, very interesting. But we can go a little bit further than that because this high point that we see over here on the logarithmic scale is an interesting point of reference to take. Why take this high and not this one over here, for example? It's like we're picking and choosing the ones that we want to draw. And well, if we go ahead and take this high from 2017 and we draw it across the lows that we had over here, for example, as in we're looking at this as being our support level, we lost it still, we had a secondary test, but we've already had that breakout. Okay, we've already broken above this trend line. So again, one for the bulls here, a real bullish movement to the upside that we saw late 2023, around November time. And I will talk about something else about November later in the video because it is a critical month for the price action of BTC. So with a potential bullish move and a breakout from here, what is the next logical step? Well, our next logical step will be a confirmation that our trend line would be, in fact, a support trend line, right? So we broke through it as a resistance and it's now got to come and turn into a bit of support. For that to happen, we've got to see Bitcoin come down towards $38,000, maybe as low as $37,000, right? That's going to turn it into a support line for us. And then from here, we could potentially see a real strong bounce to the upside, and maybe we'll talk about new all-time highs and all that wonderful stuff. So for the most part, that would be a more, I guess, bullish way of looking at the trend line versus the non-logarithmic where we're just testing it as a resistance right now. Ultimately, on our weekly chart, and I've been through this a number of different times, we are heavily overbought, right? So we know that momentum to the upside is running out. A likelihood of a 30% correction for Bitcoin is highly probable. This is going to get us back down to more reasonable support levels, which if we go ahead and take a look at, we can actually draw these on right inside here. And if we go ahead and just pull this across, you can see 30 to 32,000 or 30 to $33,000 being the most logical area for a retest, right? And so although our trend line here to that upside that we had drawn up would actually indicate more $38,000, $37,000, this area is more likely to be a good key support area for us, and one of these areas that I'm really focusing in on. Now, Bitcoin did push up into a new yearly high yesterday, and so coming down towards $30,000 is about a 35% drop now, okay? So we have to kind of take it all with a pinch of salt as to whether or not we are going to see $30,000 again, or whether we're going to see $35,000, or maybe we do have that rug completely pulled from beneath us and we see $20,000, $25,000, right? No one really knows what the future holds, and it is a bit of a moving target. But that being said, we have had a pretty interesting run up in the beginning of 2024 so far. And I did go through this yesterday as well with regards to the Q1, the first quarter of the year that we have a Bitcoin halving. So you should probably check that video out if you haven't done so already, because I do go through some really interesting price action, how it relates to the Bitcoin halving event. Now, the other thing that we need to talk about is November 2023. Now, we have seen across various different social media platforms the idea of a golden cross for Bitcoin. Now, a golden cross for Bitcoin, for those who are not aware, is basically a short-term moving average crossing higher than the longer-term moving average. So we can see right over here, for example, we had a death cross, right? This happens when the longer-term price action crosses above the shorter-term price action, i.e. the white line, which is our 200 EMA, went above the 50 EMA and 50 SMA. Well, we saw the same thing, but in the opposite direction. We saw a golden cross over here, and this happened in November of 2023. Okay, the 50 SMA, the simple moving average, crossing above the 200 exponential moving average, the EMA there. And again, this is on the weekly time frame. Now, what we've seen most recently is people claiming that a golden cross has just happened, and I can't quite see how they've done that. So I'm going to park that idea because I don't know how they managed to get a 50 simple moving average above the 200 EMA this week just gone when it actually happened over in November. So maybe there's something funny about their charts that they're doing. Maybe they're doing it very differently than than what I am. But for the most part, as far as I can see, and as far as my analysis is concerned, a golden cross happened already. And when we saw that golden cross, we saw exponential growth when it came to Bitcoin. We've seen 63% to the upside. So the question becomes here, are we about to see that call-off period since November when we actually had the golden cross occur? Likewise, when we had our death cross, we saw price move down by 22%. Okay, nothing major either. So on our weekly time frame, things are definitely looking quite interesting, right? We do know that our momentum indicator is really high, right? We know that we were overbought and we've started to cool off a little bit. We do see divergence here to a degree because price has pushed up higher with momentum pushing down. This is actually a bit of a bullish tell rather than a bearish one, but I do suspect that things are going to get a little bit more nasty as we start to see the SEC's decision on the Bitcoin spot ETFs. So for now, I'm going to kind of wait and see how that one plays out as to whether or not we are going to see some kind of bullish resurgence here as we continue a run to the upside on the back of the Bitcoin spot ETFs. Ultimately, though, I expect actually the opposite to be true, where we continue a healthy correction to the downside on the backs of those Bitcoin spot ETFs. And this is a logical thing. I've been through this a number of different times. It's kind of at this point rather illogical to be thinking that the Bitcoin spot ETFs is not going to be a sell the news event. The logic tells us that it is more than likely has a higher probability of being a sell the news event. I've been through this a number of different times. On this particular chart here, you can see we have several key events that have happened for Bitcoin over the years. We have the CME going live, and we saw an 84.12% drop on Bitcoin's price on the news that the CMEs were going live. We then had Coinbase IPO, and we see a 55.93% when that went and happened. Okay, and these are all very key things. Even the Bit Futures ETFs was a 73.62% drop. And then we got people saying that this time is going to be different with the Bitcoin spot ETFs. There's one thing that ties all of these events together, and it's quite a simple one. Everybody in the crypto world at these points in time all knew the same thing. And it's the same thing that we know right now. We all know when it's going to happen. Okay, we can know that some kind of news is going to break this week when it comes to Bitcoin spot ETFs. That was the same for the CME. It was the same for the Coinbase, and it was the same for the futures ETF. And because we know in advance that some kind of news is coming on a very specific time period, people generally buy into the hype and into the rumor, and they sell the actual news and event. Is this time any different? I suspect it is most likely not, but we can go deeper than just this. Okay, so we've gone through this a number of different times, and I'll go through some of the most interesting stuff that's happening right now as well from our price action. As you can kind of see here, we have a Fibonacci retracement tool running, and this runs from the high of $69,000 down to its bear market low at $15,469, right? And this is interesting because where we are right now, we have failed to close above the 702 Fibonacci level. This is a manual area. You have to add it into your Fib chart. It's not there by default. And Bitcoin reacts amazingly well to the 702. Currently, we are above the 702, but we've got a whole week yet before we actually see any kind of closed candle on this weekly chart. A closed position above the 702 would give us a bit of a bullish movement, at least give the bulls a bit more confidence in Bitcoin's price action. But the 702 is only really minor. It's minor to the 786. The 786 is your key area of resistance. I've also drawn on this yellow area just here on the chart. This, to me, is the key area that we need to see a closed position above. And of course, we need to see that close above the 786, which is $50,112, if we really truly want to see a big bullish break to the upside. Now, we have the ability to wick up there. We can be up there for a couple of days, but it's the weekly candles that I'm really looking at paying attention to here. So considering that we're up against the resistance, the 702, the previous area of resistance back from March 2022, and of course the 786 also being an area of interesting resistance for us, Considering the Bitcoin spot ETF is coming to a point where the monthly is overbought, the weekly is just underneath that overbought area, hitting resistance 702, 786, and previous area of resistance from 2022, there's a lot of reasons to think that this is where we start to see the retracement for Bitcoin. But you can let me know in the comments below what you think about this, and I urge you guys to check out this video where I am discussing everything that is going on with the Bitcoin halving events and the most relevant price action in the first quarter.